In this video, I'm revealing the SPY Steady Ascent Strategy, a systematic approach that trades the SPY, the Spider S&P 500 ETF that's delivered a 340% return over 2 decades with a high win rate of almost 76%. Stay tuned because I'm sharing the exact entry and exit rules with zero guesswork. This strategy trades SPY on a daily time frame and only takes long positions. The idea is to capture breakouts when the market is in a calm phase, increasing the probability of a successful trade. I've put together a comprehensive strategy guide you can download completely free from the link on the screen or in the description below. Okay, before we get started, here's the disclaimer. This content is for educational and entertainment purposes only and should not be considered financial, legal, or investment advice. I do not offer recommendations, solicit actions, or account for individual financial situations. Before we look at the rules, let's check out the backtest results. We tested this strategy from January 2004 to January 2025, over 20 years of data. Here are the key stats. This strategy has a total return of 3.4x, or a 340% return over about 21 years, an annual rate of return of 7.3%, with a last 5 years return of 10.7%, indicating an improvement in the recent performance. A Sharpe ratio of 0.71 indicates decent risk-adjusted returns. A maximum drawdown of minus 23.2%, and a MAR ratio, which is the annual rate of return divided by the max drawdown of 0.31. An average exposure of 63.3%, which means the strategy isn't always fully invested, and an exposure adjusted return of 11.5%, which accounts for the partial exposure. Over these 21 years, we have a total of 173 trades, or about 8 trades a year, an expectancy, which is the expected average trade value of 0.91%, a healthy number, a profit factor of 1.91, a win rate of 75.7%, which is a high success rate, an average win of 2.5% versus an average loss of 3.9%, and an average win length of 18 trading days versus an average loss length of 24 trading days. This is the equity curve of the strategy. You'll notice that except for the periods such as the global financial crisis in 2008 to 2009 and during the market correction in 2022 to 2023, it's generally on a fairly smooth upward slope. This table shows the yearly and monthly percentage returns, along with total annual returns and maximum drawdowns. Here are the key takeaways. The highest annual return was in 2020 at 26.4%, followed by 2023 with 22.3% and 2021 with 21.9%. The worst annual return was in 2022 with minus 14.5%, followed by 2011 with minus 3.5% and 2008 with minus 3%. 16 out of the 21 completed years have positive returns. The best monthly return was in September 2010 with a 8.3% return, and the worst monthly return was in January 2009 with a 9.9% loss. This strategy has a maximum drawdown of 23.2%, which is the largest peak to trough loss, and this happened in 2009. Now, here are the rules. To enter a trade, we follow 2 key conditions. The 20-day average directional index, or ADX, must be below 30. This tells us that the market is in a low volatility state. We then place a stop order at the highest closing price of the past 30 days. This ensures that we enter on a breakout. Next, we need to know when to exit. Here's how we manage risk and take profits. We take profit when the price reaches 2.5 times the 14-day average true range, or ATR, above the entry price. The stop loss is set at the higher of the lowest closing price of the last 50 days, or 5 times the 14-day ATR below the entry price. For this strategy, we also have a time stop, where we'll exit after 35 daily bars if neither the take profit nor the stop loss has been triggered by then. For a realistic backtest, we included transaction costs. For the commission, we assume the higher of either $1 or half a cent per share, which is the default Interactive Brokers commission. We also assume a slippage for stop orders of 1 tick. These transaction cost assumptions help ensure our results are closer to what you expect in live trading. Now let's take a look at what some of the entries and exits look like. You can see how the strategy enters at key breakout points and manages risk. To recap the trading rules, anytime the ADX is below 30, we place an order with an entry stop for the next day at the highest closing price of the past 30 days. In this case, due to a strong market rally, the stop is triggered and the price fluctuates between the take profit and stop loss level until one is triggered. In this case, it's a take profit that's triggered with a return of 3.7%. This example trade shows a loss where instead of triggering the take profit, the stop loss was triggered with a loss of minus 5.39% in this case. The win rate for this strategy is 76%, so losses only happens less than 25% of the time. This example shows a time stop where after 35 trading days, we exit the position if neither the take profit nor the stop loss is triggered. So what's next? We're moving into forward testing, tracking live market performance to see how this strategy holds up. We'll be updating the performance of this strategy on a monthly basis. If you want to follow along, make sure to subscribe. Now, here's where things get really interesting. While a 7.3% annual return might not sound revolutionary, this strategy is designed as a building block in a larger system. When combined with other lowly correlated strategies we'll be revealing in upcoming videos, we're targeting double the annual returns of the S&P 500 with less than half the maximum drawdown and a smoother equity curve that lets you sleep well at night. This is just one piece of what I call the Holy Grail portfolio, a collection of strategies that work together to deliver what individual approaches cannot. If you found this video valuable and want to follow along, do these 3 things right now. Download the complete strategy guide using the link in the description below. Subscribe and hit the notification bell to catch our new strategy reviews and monthly performance updates. And share your thoughts in the comments below. I personally read and respond to everyone. For those who want to go deeper, I'm sharing more exclusive strategies through my newsletter at grailwealth.com, and you can connect with me directly on X at grailwealth. See you in the next video where we'll reveal the next strategy in our Holy Grail portfolio. Until then, happy trading.